Welcome to yet another quarterly webcast. This short video taping will offer you the chance to get acquainted with the views of some of our experts. Iwan, welcome.
Good morning.
Optimism, pessimism alternated itself like there's no tomorrow. For you, what are the most remarkable developments of these past couple of months?
Yeah, clearly in the last quarter, market sentiment and market prices were clearly influenced by the situation around Greece. There was still no outcome, so the referendum on Sunday is going to be very important, of course. So you've seen during the quarter that equity prices, especially in Europe, were very much influenced by optimism, pessimism around the outcome, around Greece reaching a deal with its creditors. So that indeed was a challenging environment. Next to that, in the fixed income market, we've seen that the German 10-year yield reached an all-time low on April 20th, 5 basis points. What we saw at the same time was that investors were quickly reversing their positions shortly after, driving bond prices down, yields up. So we ended the German 10-year yield at 0.8% by the end of the quarter, meaning 16 times as high as the low that we reached in April 20th. On the currency side, after many quarters of depreciation of the euro versus the US dollar, we finally saw an appreciation of the euro in the last quarter. So those were the three main challenges during the quarter.
So looking at the 10-year yield, the appreciation of the euro, how does that affect your positioning and ultimately your performance?
Yeah, no, for the quarter we basically kept to our risk-on stance, meaning we had a tilt towards equities and real estate. We have been cautious on fixed income and on interest rate sensitivity. So we brought down, for example, the duration of the fund in April back to 1 year, so that's very low. Added somewhat to the duration over the rest of the quarter. Performance-wise, flat up until May, and the last weeks have been quite challenging. So the quarter performance was negative, but all in all, year to date, we still have a positive return, and actually a return which is well above the return target for the year. So we are still good there.
So I hear some mixed signals, but tilting towards the positive. So give me your forward-looking view.
Yeah, our view is still that we think that global growth will pick up in the second half of the year. So from a fundamental point of view, we think that's still the type of environment where you want to have a risk-on stance. I do have to say, though, that for a couple of reasons, summertime, low liquidity, also the volatility, uncertainty that is still lingering around the situation in Greece. We have decided to tactically scale back our bond and equity stance for the moment. But needless to say, as always, we closely monitor the situation that's going on, and when we feel we should adjust the positions, then we do immediately so.
Oh, and monitor we shall.
We
Thank
will.
you, Iwan. And if you would like to find out more about Iwan's views, please visit nnip.com.